Some Asian markets closed in the red as fresh Chinese and US tariffs on goods worth hundreds of billions of dollars kicked in. That's despite US President Donald Trump reiterating that the two sides were still due to hold talks later this month. This is the latest in the long-running trade war between the world's top two economies, which has rattled markets and hit growth across the globe. The Nikkei and the Hang Seng falling 0.4%. The Nikkei closing at 20,620 points. Hang Seng down at 25,531. Shanghai Composite Index up 2,924 points there. Wall Street showed mixed results on Friday as investors were cautious ahead of a holiday weekend in which a fresh round of US tariffs on Chinese imports were due to be levied. The Dow Jones Industrial Average rose 0.16% to close at 26,403. The S&P 500 gained 0.05% and the Nasdaq Composite Index dropped to 0.13%. So Arabile Gumede is standing by at the Johannesburg Stock Exchange. A very good afternoon to Arabile. Your time matching a lot of what's happening on the board behind you. Take us through the markets.
Yeah, well, it seems like it's our outfit, isn't it, Nzinga? Well, certainly the red certainly filtering through into that market picture today. But it is quite muted, really, if you were to take a broad look at the JSE All Share as well. So that market picture not necessarily doing too well. A few interesting elements, of course, as you said, the tariffs coming into effect there between the United States and China. The US lapping 15% worth of tariffs then, excuse me, on things like footwear, even flat screen TVs actually from China as well. While on the other side, China decided to levy a 5%, to put in a 5% levy then on US crude. So any imports of US oil into China will be 5% more as well. So that's certainly filtered through, but there are some murmurs as well then of the continued talks and negotiations, so that will continue to be a factor in the global market. But it does seem that risk-off trade has continued, risk on trade should I say, has come into effect a little bit as the rand continues to be in a slightly better picture. But with that in mind, let's take a look at exactly how the markets are faring with regards to those numbers, and we'll unpack them in just a bit. A much better picture then, as you can tell, then from the rand when it comes to that 15.19 odd against that US dollar as well. So a key mark on that front. Let's chat to Viv Govender now from Rand Swiss, who joins us as well as we unpack that picture. Viv, thank you so much for the time. Pretty muted market picture on the local front. There is some positivity to have come out of Asia, but one gets the sense that the tariffs, which obviously were expected, still will shock the market at some stage.
Yeah, I mean, look, the trade war seems to show no signs of de-escalating at the moment. I was expecting that. I mean, I think the only way it's going to de-escalate, only way it's going to come back is if Donald Trump sees the political advantage for that. Right now, I mean, in terms of one of the key aspects of like his appeal to his voters is that he's a strong man willing to fight for America's rights among international, partners who are cheating him, like Iran, China, even the European Union is like not being escaping. I mean, look at what he tried to do with the French wine situation. So I don't think this is a losing political battle for him. And if that's not the case, then he's not going to be too keen to cut things back unless he sees real signs that the economy in the US is, crumbling.
The difficulty then with it is, how do you plan in and around this trade war? How do you put out with regards to the market? What do you actually go in for, and how do you actually set yourself up?
Look, I mean, this current environment here, not just the trade war, the fact that we've had the longest bull market effectively in forever. We haven't seen a pullback. We are depending on very low interest rates and so on. Those things indicate that if we do see a bit of a pullback, we could be seeing a substantial, pullback. The longer you go up, the harder the fall is going to be. And so we could be something, equivalent to like a 30-40 40%, overall market pullback globally. So that's something that's very painful. In that environment, you probably want to be having some kind of protection. So I'm advising clients at the moment to go for things with capital protection and some upside. Even if you have to give up the maximum upside, you want to have the guarantee that a part of your money is not going to go down too dramatically should markets crash. And that's an important thing to look at the moment. Protection is, I think, a bit at premium at the moment.
Yeah. How do you protect yourself then against an Old Mutual share price that has fallen 18% since the saga with their CEO Peter Moyo has ensued, and at the same time now today they come out with a set of annual earnings, 2.4 billion rand pledge to buy back more undervalued assets. So clearly they feel that their share price is a little too low.
Unfortunately, historically, companies have very little ideas to win on whether or not their shares are undervalued. I can show you many, many examples of companies, very famous companies, buying back shares basically at times at which they were near the all-time high or the medium-term all-time high. Yeah. So we are seeing a situation here where this company is buying back. I can understand the rationale. They're saying, our earnings are up, 10% up in profits. We haven't really changed our business practices. Yes, this guy has a problem with us, but an 18% fall is not going to be something that truly reflects what actually is the impact of this particular dispute at the moment. And so in that scenario, you might argue that you want to buy buying back shares because you're going to see value for them. But I do think that Old Mutual, even if there was this case with regards to his the CEO's basically Moyo's suitability for the job, there's smarter ways to handle it. If you're going to fire somebody and go out like this, basically accuse them of having conflicts of interest and so on, you better make sure that every I is dotted and every T is crossed, and they didn't in this case. And I think that's one of the concerns, because that's not a case of whether or not you are doing the right thing, is whether or not you be able to do the right thing, whether or not your competence is at the level.
Yeah, sure. We'll certainly see how that saga continues to move on. Another saga happens to, of course, then be Sun International, right? And they come out with earnings, and it does seem that things like Sun City not necessarily doing as well as they would have liked, and the CEO really just speaking about how he would like to just focus a little bit more on making sure that the guests are happy and their operations are all right. Is that really the strategy at a time like this?
Look, what they actually are doing more at a strategic level is focusing more on South America, which is obviously where they're seeing more growth than they are seeing in Southern Africa. And they're also saying that they don't see any signs that our economy is going to recover anytime soon. So that shows what maybe this is the skin in the game interpretation by a company of Ramaphosa's plans going forward. So they do think that South Africa is going to be under pressure for some time going forward, which is not a good sign. And they are focusing more on Latin America, but they're still increasing the footprint in South Africa. So they're showing that the longer term view is still that there's opportunity here. But these kind of views, focusing on customers, focusing on those kind of things, of course, companies must do that to be basically succeed going forward. But you want to see the CEO also trying to view itself strategically, trying to see where the opportunities are, trying to focus resources in areas where they'll see the most growth. And right now, I think that's happening in South America, unfortunately.
Should Bidvest be doing a little bit more? Just looking at their business right now, are you happy with where they currently sit?
The market's happy with what they currently sit.
It's up 3% thus far.
Yeah, interesting. Revenue is basically flat, but profits are slightly higher. So they're showing that they are doing a bit of cost cutting. They are being very careful with capital expenditure and so on. So they are kind of doing the turtle approach. They know things aren't going well in terms of revenue coming in. And a company like Bidvest is an economy exposed company. They can't really escape economic growth, because economy goes up, they do much better. Economy goes down, they do not so well. In that kind of environment, what you want to be seeing from a company like that, there is cost cutting, margin improvement, and basically be able to hunker down during this tough time. So when things do turn around, you will see a growth come through. Yes, they can go and decide to go and have expansion in areas in other parts of the world where they do see growth coming through. That's true. But I think for a company like this, you need to take a lot of infrastructure build to get to a point where you're into a country and so on. So in the major economies, things are growing slowly. You hunker down, you cut costs, and they're doing it at the moment.
Yeah. Very quickly, tomorrow is GDP numbers out for the second quarter. Are we avoiding a technical recession?
I think we will. I think a technical recession will be avoided. We'll get about 2.5%, I think, in terms of the growth rate. That's the consensus at the moment. The technical recession, by the way, my one bit of argument here, is never real. Okay, to get 2 quarters negative in a row doesn't really matter. What really matters is your economy growing faster than your population. If it's not, which we are not, you have a recession, because everyone in the country is getting poorer on average. Anyway, we are in South Africa at the moment, unfortunately.
That certainly is the case. Viv, appreciate the time. Thank you so much for that. Around a 10% uptick then from that all share number, the JSE all share, that is. Yep, indeed it is. Tomorrow around 11:30 we'll see that GDP number come out of Stats SA, so we'll definitely give you the lowdown on that one as we of course prepare for the World Economic Forum on Africa, which does start on Wednesday in earnest. But for me, that is where the buck stops. It's back to Nzinga in studio.